Hi everyone, let's talk about the FSS dashboard. This indicator was a tool to make your trading life easier and to enable you to make quicker and more informed trading decisions. It sits unobtrusively on the top right hand corner of your main chart. There it is. And it forms part of your trading toolbox. Now, that would include the various chart patterns I've taught you, support and resistance, trend lines, moving averages, candle patterns, your swing highs and your swing lows, your sweet spots which form support and resistance, using the average daily range correctly, trading with the trend, avoiding news times, and so on. So this is a trading tool. It's designed for the FSS method, hence its name, on the 15-minute chart. The first part of the dashboard reminds you of the currency pair you're in, because if you're changing charts a lot, sometimes it can get confusing. Here we're on the Aussie dollar 15-minute chart. Beneath the currency pair name is the average daily range, the ADR calculator. This is today's range. Now today's range has been 95. You can see that yesterday's range was 84. We can see the weekly average daily range is 91 and the monthly average daily range is 103. So when price came up here to resistance at 109.80, not only was it resistance because of the sweet spot, it was also at the top of its range. The room up is 13. When this is at 0964, so when it went up to 0978, there's no room up. The room up would have been close to zero or negative. So I wouldn't take a long trade there because the average daily range has been fulfilled. That doesn't mean the Aussie dollar won't go higher. It means it's a lower probability trade and you better look for higher probability trades. So you wouldn't take that trade. Yesterday's range were 84. As I've said, if you get a few days of low ranges, then you tend to get an explosive day later. But this is close to its, these are close to the daily ranges, the average daily ranges. The weekly average daily range is calculated over 5 days, the monthly over 20 days. The room up calculation, in other words, how far you've got left before you need to not trade in that direction, is based on the weekly and monthly divided by, added together and divided by 2, in other words, the average of those two numbers. If you get daily ranges which are much smaller than the monthly or weekly average days range, you can guarantee you're going to get a very large daily range very soon. The room up and room down is very useful. If the pair is in an uptrend, the room up figure will decrease until it gets to zero, and this would have got to zero up here. If it goes negative, the room up figure, which is yellow now, will turn red and sound an alarm which will come up on your screen. If we're in a downtrend, the room down figure decreases until it gets to zero, and then if it goes negative, you'll get an alarm and it'll turn red. I do not like to take trades, for example, long if room up is near zero, and I don't like to take trades short if room down is near zero. This one, the P20MA, tells at a glance how far price action is away from the 20 moving average. Now you can see it's only 3 pips, and because it's blue, it is 3 pips above the moving average. Now, the P40MA tells us how far price is above the 240 moving average. This is 65 pips, and because it's blue, price action is 240 pips, is 65 pips above the 240 moving average. So at a glance you can see that price is above both moving averages, which is good for a long trade, of course, provided the daily range and everything else is as it should be. LS is the size of the last swing. Because sometimes if we've had large swings, we're going to get some smaller swings after that in consolidation and vice versa. The last swing was 19 here. The last swing means swing high to swing low. And because it's in red, the last swing was a downswing. And then you got pips to the swing low, 9 pips to the swing low, and the pips to the swing high, 10 pips. Because it's negative, with 10 pips below the swing high, with 9 pips above the swing low. Very useful at a glance to see where you are in, where price is in the marketplace. So looking at this, I wouldn't have traded higher past this resistance level because we'd have been in room up negative territory. And that would have saved me, because look, the price has come off now and not exceeded that. Let's take another pair. Now, this is interesting. Dollar Swiss franc. Today's range has been 121. The average weekly is 103, monthly 94. So you've got an average of about 99. Yesterday, very low range. And if you get 2 or 3 days of low ranges in a row, you're going to get a big explosive day like we've had today. Now you can see price has fallen and fallen and fallen. And at the moment, room down is negative by 2. But it's been negative by probably 25, 26, maybe even more. So it's really exceeded its daily range. If I was trading here, we got the pullback here, and then price came down. Here we're on 86.62. That would have been about 100 pips. Sorry, that would have been about, let's work it out. 86.62 here to the high, 82 pips. So I would have taken that, because it's 10 pips below its average, because it's already been down. I expected it to come to this low. However, I wouldn't have taken this trade here, because it would have been when room down was negative, and I won't take those kind of trades, the low probability. As it happens, this trade did work, but more often than not, it's going to burn you. Looking at other things, the last swing was 34, and it was a positive swing. And there it is. We are 76 pips below the 240 moving average, and we're below the 20 period moving average by a couple of pips. So this was an excessive day, and you can go with the flow up to close near where room up becomes 0, but you wouldn't trade it any further. Sometimes it works for you, sometimes it doesn't. You'd be taking a chance. Nothing is foolproof in Forex trading. We can only work on probabilities. Look at the euro dollar today. Euro dollar finished with a range of only 77. Yesterday's range was also below the averages. The average is about 132, isn't it? So we've had 2 contracting days, 2 low range days. It's quite possible if we had a low range day Monday that we could have some explosions coming up Tuesday, Wednesday or further in the week. Pound dollar, again, low range day today, so I'll watch out for this next week. I had the FSS dashboard, the software specially made for me, and I do have it on sale on my website just for the token amount. I have a lot of free indicators on there, but I've had to pay for this, so I'm afraid you'll have to pay for it too. But it's only €39. and you've got an excellent trading tool for that price, and it's on www.thebookonforextrading.com. I hope you found that useful, and I hope you find the FSS dashboard a useful tool to help with your trading and to make money. Thank you, folks.